Happy Friday. I'm Jamie Trull. I'm a CPA, financial literacy coach, and profit strategist. Say that 3 times fast. Lots of titles. And I am currently live in my Financial Literacy for Women Business Owners Facebook group. If you're not a member over there, I want you to go to jamietrull.com/group and come join us. We're having lots of conversations about all things stimulus that are going on right now over there. Also, I am live currently right now on my YouTube channel. Make sure to subscribe if you're watching me over there. We're trying to double our YouTube in the next couple of months. So if you guys want to help me get there, that would be great. So make sure that you're subscribed to my channel on YouTube and that you like this video too. And I'm also live on my business page. So tell me you're here. Hi, I see Stacy. Let me know when you guys are here. I see some of you guys jumping on, which is great. This is my normal Friday live. On Fridays, I come to you at 1:30 Central Time. I'm in Nashville, Tennessee, so I go by Central Time. But whatever time it is for you, happy Friday. And we're going to talk about updates to stimulus things going on, and then I'm going to take some of your questions. I have to do a short live today. I've got a couple of things this afternoon, but hopefully I can get to some of your questions. So let's talk about some new things. PPP deadline has been extended. So if you have not gotten your PPP loan or your second PPP loan, then you are going to have more time. That deadline is now going to go through May 31st. And also the SBA then has another 30 days to get through kind of the backlog. So that's a good change. Will money last that long, though, is the question. As of right now, actually, I'll check it while we're on here because I haven't seen the most recent stats. But as of right now, there's money left. It's not going to run out tomorrow. But I could see by roughly mid to late April that money pool may not be there. So one of the big questions I've been getting with this extension is how does this impact people if they just got round one, right? Now you can get up to 2 draws of PPP money. Right now, it's pretty much only been people who got their first draw in 2020 that have been able to get a second draw. But some of you guys who maybe got your first or your second draw in March, could you, or early, or even in February, right? Could you potentially now be able to get a second draw as well? And the answer is a very specific maybe. So the important thing is the way the rules are written, you have to use the full amount the way that you're supposed to before you get the money deposited into your account. So you can apply before you've used it all, but you need to have used it all before the money gets dropped into your account. You don't always have a lot of control over that and how fast that process goes. So it's a little bit of a weird thing there that is a rule, but you just want to make sure to use it correctly. Now, there's a lot of questions specifically about, it's a little bit easier for people who have employees, how to use it correctly. You know what you need to do. For people who are solopreneurs, it gets a little bit murkier. So I want to, because this question has come up a lot this week, I want to give my thoughts on that because there are some, I wouldn't even call them banks because they're not banks. There are some entities that are suggesting stacking and applying for 2 loans at once or 2 loans very quickly from one to another. So a couple of weeks, maybe only in between. I do not recommend doing that. Even though you can technically pay yourself the full amount of the PPP loan to yourself and have it forgiven as a solopreneur, we have to remember that the intent of the program is for that to be 2.5 months of payroll. Right? And especially now that you may be able to use line 7 on your Schedule C, that should be more actually than you probably have paid yourself in the future in the past from a payroll perspective. So that is the intention of the program. So you can see where even though, yeah, you can technically, it doesn't matter for forgiveness, whether you pay yourself lump sum or over time, it's still considered in the eyes of the SBA to be 2.5 months worth of pay for you as a solopreneur. So then you step back and think, okay, does it make sense if I applied on, if I applied on February 15th and got my money on, March 1st and then applied right away, like paid myself the full amount all at once and then applied right away for another one, your covered periods are going to overlap. The shortest covered period you can have is 8 weeks. And really, if you want to use the full amount to pay yourself as a solopreneur without having to use it on other stuff, then the shortest is roughly 10 to 11 weeks. It's like 10.8 weeks, but basically 2.5 months is the shortest covered period you can have. So it seems very odd that you would have covered periods that would overlap. To me, that is not in the spirit of the guidance. And if you got a loan and then 4 weeks later got another loan, I don't think that would be in the spirit of what PPP is for. I also think there is a decent chance that they would come back later. That's an easy thing for the SBA to check, right? Okay, this person got a loan on this date and on this date. How easy of a check is that? And if you don't think they're going to be checking on these things for fraud, right? Then you are wrong. So I would definitely be wary there. Be wary of people who are telling you can do this, and make sure that those people are credentialed. Hint, hint. Okay. Make sure that they know what they are talking about and that they're not just advocating for a service that is recommending people do something that then has a giant disclaimer on the bottom and says, we're not responsible for, we're not actual professionals and don't really know what we're talking about. Some of you know what I'm talking about here. Jody's got me. I won't put it up, but Jody knows what I'm talking about. There are a few providers out there that are not fully on the, I don't know if they're not informed or if they are just trying to capitalize on the situation. Maybe both. But just be a little bit careful there, you guys, because at the end of the day, even if a bank lets you do it, a bank letting you do it does not, there are banks that let people get 4 different PPP loans, right? That doesn't make it okay. You can't put that on the bank. That's going to come back on you. If you accepted those loans, you can't just say, well, the bank let me do it. That's not going to be a good excuse. That's going to come back on you. Okay. All right, guys. So that's the update with the PPP. Let's see. We had some other updates this week that were going on as well. More stimulus checks should have come out this week. EIDL has been deferred. So it's part of the American Rescue Plan, right? So if you got an EIDL loan in 2020, which a ton of people did, this is the loan, not the advance. It's a different thing. This is the loan. If you have an EIDL loan and you have it outstanding, your payments were supposed to originally be due 12 months from when you got that loan, right? Your papers, if you get out your loan papers, it says that. They're deferred another year, okay? So if you got a loan in 2020, it's deferred now for 24 months from the date you got the loan. You will not be requested to pay anything on that loan for 24 months, a full 2 years. If you get an EIDL loan in 2021, and you still can, you guys, then you are going to get an extension. Yours is going to be 18 months total. So 12 months plus an extra 6 months. Okay. So you've got, pretty much everybody then is going to have until at least 2022 to be paying back this loan. That's because we're still kind of in the middle of the pandemic, hopefully at the tail end, but we will see. And so they don't want to make people pay for that. That could, however, remember, you're still accruing interest. So if you're holding on to this loan, you guys, I want you to be informed about what's going on. I'm coming out next week. I want you to watch for this. I'll have a new YouTube video out, and I'm revamping the old EIDL calculator, okay? And I'm going to revamp it for the fact that you're going to continue to accrue interest over that extra 12 months. So I'm going to change all the tables that I have in there that assume a 12-month deferred period to a 24-month. And I am assuming, when I think about this from an accountant's standpoint, that what this is going to do is increase your payments after that 24 months. So that's something really to keep in mind, is that your payments are going to be increased now, because what's going to happen is you've got another year of interest, right? And no principal payments happening all this year where you were supposed to start. So because you're losing a year of principal payments, then the assumption is, I don't think they're going to add on to the back end of the loan. My guess is that because they're calling it just a deferral of 24 months, that it will increase, probably not a whole heck of a lot, but it will increase your payments a bit. So I'm guessing that we are going to see, yes. So I'm guessing that we are going to see the paperwork coming back out from the SBA. I don't think they've communicated this out to people. They're probably trying to figure out how they're going to roll out these changes. If it's going to be automatic, I would assume. But you can always elect to make early payments or elect to pay the whole dang thing back. Because remember, even if it's sitting in an account you haven't touched, you're accruing interest on that. And it's not a small amount. So make sure you are informed about how much that is. The calculator that I'm revamping right now, that'll be available next week, that calculator will tell you how much interest you're accruing and how much you can save with early payments. Okay. So whether you make payments during the deferral period or you decide to increase and make extra payments during the loan when you're paying back the loan, my calculator is going to show that. It's not available quite yet. It is, I will say it is available, except Google Sheets is my nemesis. And I'm trying to get my accountant friends, if any of you are watching, you understand that Excel is like the gold standard of being able to do all kinds of crazy calculations. And I can use all of my favorite formulas. And then I try to put it into Google Sheets for those of you who don't have Excel, and everything breaks. So before we send that out to anybody, we are going to fix that problem to make sure that Google Sheets is going to work too. But that means I have to work in my nemesis, which is Google Sheets, probably all weekend to get this thing working. Stimulus checks are on their way out now. They should be coming. But keep on the lookout. They're kind of coming in waves, it seems like. I think they sent out another wave maybe this past Wednesday. So you should see them. I did a whole video, though, on if you don't get your stimulus check or if you don't qualify for a stimulus check, et cetera, what you do. For this stimulus check, you basically have 3 different years that you can qualify for if you pay attention to when you're filing your tax return. So make sure to find that. It's on my YouTube channel. If anybody has it, you can drop it here. But I have a whole flow chart that goes through the how to make sure you get the maximum amount of this particular stimulus payment. Because ultimately, you can use either 2019, 2020 or 2021 tax returns. And as long as one of those is under that threshold for your adjusted gross income, you should be able to get it, but you got to know some dates. Some dates are important in there. Okay. Yes, I just can't do it. I'm a creature of habit. I've been using Excel since I was yay high. And yeah, I can't do it. Let's see. Why has 15% been taken off all 3 of my stimulus checks? I don't know, Lo. They should not be doing any kind of tax withholding because it's not taxable. It's a tax credit you get in advance. So it's not taxable. The only way it would be is if you are in the phase out period. So you might not get the full amount if you're within the phase out period. So those phase out periods for the first 2 are different than the third. The third, it's a shorter phase out period. But if you're in the middle, right, you're going to get not the full amount, but that goes based on your adjusted gross income. So you can check out the info. Let's see. Oh, yay. Thanks. Thanks, Bree. A full $150,000 EIDL loan paid over the full 30 years will see a monthly payment increase of about $25 a month. There you go. There you go. But yes, get my spreadsheet too. But that's good to know. Okay. And now, speaking of EIDL, they have removed the cap. So it used to be a cap on how much EIDL you could get of $150,000. And they're removing that cap, and they're going to be reaching out to people. Again, this is one of those situations, kind of like the advance, where they're like, don't call us, we'll call you, right? So don't reach out to them necessarily. And it's not even up and running. They're targeting, I think, beginning to mid-April for getting this up and running. But they have removed the cap on the EIDL loan. So if you need more loan money, again, it will be a loan. You have to pay it back. But if you need more money, especially bigger businesses, if you capped out at $150K and maybe could have gotten more, they will reach out to you and tell you how much you would be eligible for. I think they're mainly going to be reaching out to those people who hit that $150K cap, but we'll see what ends up happening in practice. I don't think this is going to affect many people that got smaller loans, but we'll see. Let's see. But remember, it's debt, you guys. Debt is adding up. So don't, just because you can get it doesn't mean you should. And remember, this is for emergency purposes. So it is to cash flow your business while you're coming back from this pandemic. But if you've been significantly hurt, there are other options. PPP is a better option. Getting the employee retention credit is a really good option. If you guys don't know what I'm talking about and you have employees, I need you to go watch my videos. I just dropped a new video this week on the employee retention credit. Let me find it. I can put it into the chat. But let's see, here's my ERTC video. And because there are some new changes and it was extended. Let's see. So I want to make sure that you guys go check that out as well, because there were some really important changes. It got extended. Even new businesses. Anybody here who's new business and has employees, new business being started after February 15th, 2020, and you're like, what the heck? None of this stimulus stuff applies to me. So you're probably not here because you don't think any of this applies to you. But if you are here, you could be considered a recovery startup business and be able to claim a tax credit for wages paid to W-2 employees that aren't yourself. Okay, so just FYI, go watch my ERTC thing. Yes, I love this. Thank you, Elizabeth. Yes, so that I'm getting messages like this all the time about ERTC. My ERTC calculator, I updated it for all the changes. So if you already bought it, you should have the updated version. I sent it out on yesterday. I think yesterday I sent it. I don't remember days anymore. Wednesday or Thursday. I sent it out, I think yesterday. The updated version for the changes they just made in the American Rescue Plan. If you don't have my ERTC calculator, you can get it. So let me put a little, let's see, Trull.com/ERTC. So here's how to get the ERTC calculator. Again, if you have employees, if you don't have employees, this is not for you. If you have employees, I want you to go into the ERTC calculator and grab it. JamieTrull.com ERTC. And yeah, so it's been super duper popular. And I keep getting these messages of people that are like, oh my gosh, this saved thousands and thousands of dollars. And like, I didn't even know this was a thing or didn't think you could get it, because a lot of people still are under the presumption that if they got PPP, they can't get ERTC. Not true anymore, you guys, not true. And even the IRS website isn't updated for it, at least not fully at this point. So make sure that you are paying attention to this stuff, because there's so much you can miss. And this could be up to $33,000 per employee. I'm just gonna say it that $5,000 per employee for 2020, and you can get it retroactively. But the big money is in 2021, $7,000 per employee per quarter that you could potentially get in a tax credit. What is a tax credit? A tax credit reduces the taxes owed dollar for dollar. That's free money. That's not a deduction. That's a tax credit. This one, I want to shout it from the rooftops, because if anybody in my group or who watches me on YouTube doesn't know about the employee retention tax credit and would qualify, I'm going to be upset. I'm going to be upset, because I want you to go get this money. I want you to know about it. And I want you to ask your accountant, and I want you to be relentless, because not all accountants, although I have a ton of accountants who follow this platform to get information for their clients. None of all of them are up to speed on what's going on with all of this. So you can send them my videos, you can send them my calculator. That's what I've had a lot of people do. And hopefully that will be super duper helpful. Let's see. Okay. Let's see. So if we use PPP to pay employees, we cannot put the payroll amounts in expenses. Correct. How do we do the bookkeeping? No, you can. You absolutely can now. So that was a change too. So PPP, if you pay employees with PPP, it's still deductible. Your PPP does not really show up anywhere on your tax return. Okay, guys, because if it's not forgiven, it may show up on your balance sheet, depending on the type of entity that you have. It's going to be a liability, but it's not going to show up as income, because it's not taxable income. And you still get to deduct expenses with it. That was a change that they made on the December 27th stimulus bill. And so that's a plus. Same thing with your EIDL in advance. That is completely non-taxable, and you get to still deduct taxes. Now, the only caveat there is your state may treat it differently. So make sure that you check with your state. They may need you to claim that income for state purposes, but for the most part, most states are following the federal tax treatment. There are a few outliers, as there like to be, that aren't. Same thing with the tax extension. Remember, guys, we're extended to May 15th. Now our tax deadline for personal taxes is now May 15th. If you didn't know that, alert, alert, May 15th. The reason being because of all these changes happening so late in the game, they've extended it, which I think was a really, really good idea and really needed. But your state may be sticking to the April 15th deadline. So make sure you're checking to see if your state follows federal or not. Let's see. Yes. Okay. So is ERTC a potential option for small businesses' first W-2 employee in 2021 after paying only 1099ers for years? Yes, it is. So it doesn't, your amount that you can get is not based off of anything from the past at all. So you will get it for your W-2 employees that you are paying in 2021. You can absolutely get it. The only thing is you can't double count wages you already paid with PPP, right? But you can still qualify if you got PPP. You basically want to think of, your wages. If you're paying wages, so many of the wages, and by wages, I mean W-2 wages to workers, especially other than yourself, there are many options to get that recouped. Okay, a lot of options to get that recouped. So I want you to think of every dollar of wages you paid as almost being tagged, like you add a little tag to it. Like, okay, this I paid with PPP money, right? Tag that. This I paid with FFCRA COVID sick leave because maybe someone was out sick or had to do family leave, right? There, you can get up to like what, 10, 12 weeks? 12 weeks, I think that's right. 12 weeks of when you combine your COVID sick leave and paid family leave, right? So that might be a tag that you'd put on it, and then you can get reimbursed. And then the ERTC is a tag as well. So you can't double count. Like if you paid it with COVID sick leave credit, you can't also claim ERTC on it. If you paid it with ERTC, you can't also claim PPP forgiveness on it. But you can be strategic about how you do this. Okay, you can be very strategic about the dollars you claim for what, especially if you haven't filed for PPP forgiveness yet. Then you have a lot of play on, okay, what time period am I claiming for what? And so it takes a little bit of it's a little bit of a shell game, right? You're trying to figure out the most optimal situation where you're tagging all those wages. But if you're paying wages, a lot of that should be coming back either being paid through PPP or being paid through one of these two payroll tax credits. And they're fully refundable payroll tax credits, which means even if you don't have that much in payroll tax, they'll give you a check for the rest. So I'm telling you, if you're paying wages, I need you to know about these things. Let's see. All right. Can a solopreneur C Corp benefit? Unfortunately, no, likely not. My take is there's a little bit of fuzzy area on whether owners count or not, even if you're paying W-2 wages, right? My interpretation is no, that if you own more than 51%, if you're a solopreneur, you probably own 100%. If you own more than 51% of your corporation, then you would not count for ERTC. So you would have to have outside employees. Now, there are some CPAs that don't think that's true. They just think you exclude other family members and not yourself. To me, that makes no dang sense. And if you kind of follow the IRS guidance back to it's like a circular reference kind of thing when you actually read through the guidance. But to me, it's saying if you own more than 51%, you don't count. And that tends to be where I see most CPAs landing at this point is, if spouses probably don't count, owners probably don't count. And if you're, sons and daughters and parents and stuff like that also don't count for ERTC. Now that's not true for PPP. It's different rules for PPP. You can count yourself. You can count pretty much any W-2 wage earner. Let's see. So same thing here. Yes. I would say it would not you would not qualify for it based on my read of the guidance. But again, I am a CPA. I'm not your CPA. So you can check with your CPA and see what they think. So there are three really, because you can use PPP for W-2, right? So PPP, of course, you can use for payroll. ERTC, Employee Retention Tax Credit, and FFCRA, or COVID, sometimes called COVID sick and family leave. That's the other one. But that one they need to be out. That's when you're paying employees who are out because they're sick with COVID, they're quarantined because of COVID, they have to stay home with kids whose schools are closed because of COVID. Now they've expanded it. So it also counts if you're going to get vaccinated for COVID, right? Or if you have vaccine related symptoms or something like side effects, then you can get this leave now too. That was something new in the new bill as well. So those are kind of the three things to look at. But I'm just telling you, if you're paying wages, you can probably get assistance with the vast majority of wages that you're paying. You want to use PPP first because PPP is 100%, right? And it's completely non-taxable and you can still deduct expenses. PPP is like the gold standard of support there, but you do want to be strategic about the wages that you pick. And then FFCRA again is pretty good because that's it's a dollar for dollar, even though there's a limit. ERTC, there is a percentage limit. So it's, there are some limits on ERTC. So that's probably the third in line that you want to go to and see if you qualify, but you want to look at all of those. Correct. Outside of, or family members don't count either. So if they're related to you in any way, they don't count for ERTC. It's different than PPP. The reason I think is because employee retention, they're giving you a tax credit to retain employees. And I think they're like, well, obviously you're going to retain yourself. That doesn't make sense. And obviously you're going to retain, your kids, probably. I don't know. Some of y'all might fire your kids. They're not pulling their weight. They don't need as much incentive to do that, right? So this is to incent people who are unrelated to you and are working. Let's see. This is a question I get all the time, and then I've got to run here in a minute because I do have a hard stop at 2. But this is when I get this question a lot, so I'm going to address this. So solopreneurs, if you don't have any employees, your max loan is $20,833. That means you're under the limit. You are not going to have to provide any support for actually to get your loan forgiven. Right. Now you need to retain support and all of that. But it used to be like you had to show your bank statements showing transfers to yourself, which is the dumbest thing imaginable, you guys. Like, it doesn't even make sense for sole proprietors to do that. But some banks don't understand sole proprietors because they don't typically work with them. And so that's what we got, was a weird request to do that. So you should not have to do that anymore. In which case, technically, I mean, the way they should have done this, if you were asking Jamie, if Jamie was designing this program for sole proprietors, self-employed people who file Schedule Cs, there would have been no requirement to show any type of payment at all to yourself. Why? Because that's not a taxable event. You pay taxes as a sole proprietor on your profit, your revenue minus your expenses. Doesn't matter if you take money out of your business, put it back in, whatever. So what they're doing with this is they're like, well, no, you have to pay yourself the money. Okay, but what if I have business expenses? I need the money to pay. So the silly workaround that people were having to do just in order to be able to say, look, SBA, I actually paid myself, was transferring the full amount to themselves. Some people do it all in lump sum to make it easier, totally fine. Some people do it over time, also totally fine, right? But then they're just transferring the money back in as a capital contribution into their business because they got bills to pay. Right? So it was just the stupidest, like the silliest situation of all time, I think. So that's my little diatribe on the subject. But to answer your questions, you can pay yourself however you want. I believe you shouldn't even have to pay yourself. But I'm telling people, because banks do silly things and because they don't understand sole proprietors, you might as well do it. And then if you need the money back in your business, transfer it back in. The only watch out is to pay attention if you're also claiming unemployment, to really watch out here, because that could potentially be double dipping. With unemployment, the rules are dictated by the state. So I can't opine on, well, if you claim PPP over this amount of time. In a lot of states, I'll tell you that's the case, that you claim PPP over approximately 2.5 months if you're saying you're paying yourself for 2.5 months, right? that is the general way that you do it. You claim that on your certifications for unemployment each week, and it reduces or maybe eliminates the unemployment that you are eligible for, or you just don't claim unemployment during that period of time if you want to be super duper safe about it. But look to see, I always tell people, look to see if you're taking unemployment and you're trying to get PPP, check the rules of your state, right? Usually it's best to figure out which one's better for you. But some people have been able to still maintain getting some unemployment because they've had small PPP loans. Now, in the new world, though, of PPP being based on line 7, if you're getting your PPP based on line 7, I think it's going to be even harder to justify being on unemployment, because now you're talking about you're getting a full gross income for your business for 2.5 months. And you're being able to take that as owner compensation. I think would be pretty hard to justify also taking unemployment during that time period. But again, the unemployment rules are dictated by the state. PPP forgiveness is not impacted by you taking unemployment, but your unemployment can be impacted by you taking PPP, if that makes sense. Okay, so check with your state on anything that they have out there about how PPP interplays. It's Friday. Friday is my day to just go off on a tangent about something. So if you ever want to see me go off on a tangent, ask me a trigger question like, do I need to pay myself as a sole proprietor for PPP forgiveness? And you'll get my thoughts. There are a few other trigger questions that some of you know what they might be. Fridays are a good day to ask those questions. I'll just tell you. Okay, guys, I am at my limit. You guys are awesome. I will be back next Friday, I'm pretty sure, with another installment of the Jamie diatribes about the things that don't make sense about stimulus efforts, / also answering your questions and giving you an update on all things stimulus. So you guys are awesome, and I will chat with you later. Bye, guys.